Hello and welcome to a new video of DC Capital. In today's video I wanna go over the weekly review. I want to explain the setups in detail and go over the things we learned in the previous trading week, and also I will talk about the upcoming week and talk a little bit about potential targets and the draw on liquidity, and of course a risk off and a risk on environment. And yeah, I would say let's jump right into it. This is Tuesday's trading. It's the 21st of June and we can see here the London Open kill zone. It's from 2 AM in the morning to 5 AM in the morning. Price is trading lower below the midnight opening price New York time into a fair value gap, and from there price is trading higher. Price is building equal highs here, and after that price is trading lower into this fair value gap here. Price is rejecting this fair value gap really nicely and trades higher. The New York Index AM session is starting at 8:30 AM and is ending at 11 AM. So right now we are in the kill zone here and we're looking for a continuation. Why? Because price mitigates this fair value gap, trades higher, creates this low here with sell side liquidity, and also mitigates this fair value gap. But look closely now, price is taking out this short-term low with this candle, is trading higher and is coming back once more into this fair value gap. And after that you can clearly see price is pushing aggressively higher into a premium. Also what we can notice here is that both potential setups are below the midnight opening price. Also we can see that price is trading below equilibrium here and price is in a discount. This is the London Open setup for this Tuesday. Price is rejecting this optimal trade entry here beautifully, and shortly after that it's trading higher to take out this swing high. We can see here that price is giving an optimal trade entry in the morning session as well. Price is trading lower into an area of discount and shortly after that it is seeking buy side liquidity above here and is trading into a premium market. And notice how price is trading into the symmetrical price swing with this 100 extension here, this negative 100 extension, and is stopping a little bit above this negative 127 profit extension. And this is the final trade for the S&P 500 on the 3-minute chart in the New York morning session. We can see that price is trading lower into this level of discount. We can see also that price respected this low end of the fair value gap here really nicely. Shortly after that, price is trading higher with this bullish market structure shift on this candle here. There's this fair value gap in here. I'm looking to enter at this fair value gap on this candle. There was a little bit of heat on the trade with this down move here, but that's totally fine. If you look closely, price respected the mean threshold of this bullish order block, and from there it is seeking buy side liquidity. And finally I targeted this pool of resting buy stops. Buy side liquidity is targeted, and you can see that price is also taking some sell stops below this low here and then pushes higher. This is the New York index session morning trade. The trade duration is 42 minutes. The pips to full profit is 18.5. I entered this trade at 8:51 in the morning on this Tuesday, and the risk to reward is 3.08. Okay, this is the 5-minute chart of the S&P 500. Notice that price trades lower after opening at midnight New York, and then trades higher into a premium, into buy side liquidity, and taking out buy stops here. After that, price is trading lower, rebalances this inefficiency or fair value gap, and also created sell stops during New York lunch. New York lunch is from 12 to 1 New York local time, and we are expecting those New York lunches as a potential profit target and to cover our short positions. Price finally went higher and creates a SMT divergence, and we can expect this range to be at the high end of the trading day. The US 500 is making a higher high, while the Nasdaq is failing to make a higher high. So normally both indices are moving in tandem and they are positive correlated, but we can see that the Nasdaq is not able to make a new high, so there's underlying weakness and distribution in the market. What we can expect from that? We can expect lower prices and price trading back from a premium into a discount. Also, if you look closely, we can see that price rated this short-term high with that bullish coffee bar here. So right now at this point in time, there's no interest for price going higher, and now it's seeking sell side liquidity. Now we are going from a 5-minute chart into a 4-minute chart, and here again we can see that price rated the buy side liquidity with resting buy stops, and shortly after that trades lower and leaves those equal lows with sell side liquidity and sell stops. Okay, finally we worked our way down into the 1-minute chart, and notice that on the previous slide on the 4-minute chart this price went higher, took the buy side liquidity, and now look closely again. There's also another short-term high here, and price took that as well. So this was the stop rate here. Then we are expecting price to go down. We see that decline on that bearish candle here. This is big displacement lower with the bearish market structure shift and the fair value gap in here. So this becomes our first entry. The stop loss is placed at the short-term high, and we are targeting sell side liquidity here into a discount market below this low. Also, we can take partials as soon as price is moving into an area of discount and below an old low, which could be here, below this low, or below this low. Okay, this is first day's trading. It's the 50-minute chart of the S&P 500. We can see here that price rated the sell side liquidity during the London Open kill zone. After that we can see displacement higher with this bullish market structure shift on this candle here. Also this fair value gap has been created, and look closely, price is coming back into this fair value gap, rebalanced it and trades higher. But this setup here is no entry for me because price is not trading into a short-term discount. If we are measuring from this low to this high, price is staying above equilibrium, and this is no trading setup for me, and I'm patient and I'm waiting. And this is the 5-minute chart. We can see that price is trading lower, rebalanced this fair value gap here on this candle. Shortly after that price is trading higher, leaves this fair value gap and creates this order block here. So I'm looking to go long into this fair value gap while price is at or near midnight opening price. I'm targeting buy side liquidity here, and I'm taking partials above those relative equal highs in this fair value gap in this premium market. Also notice that price is rating this sell side here. Price is staying in the premium market. Price is coming down into a deep discount market to mitigate this fair value gap here, and after that price is trading from a deep discount into a premium to seek buy side liquidity. This is Friday, the last trading day of the week. We can see that price is in consolidation here, and price is never coming back below the midnight opening price and instead is trading aggressively higher into this 1 hour gap and closing the day with a really bullish caffeine bar. Also, we can see that price is coming back below this equilibrium price point. Price is coming below the 50% and is in a discount market. We measure the swing low from here to the swing high to here to get the 50% and to determine a premium and a discount market. Final setup for the week. This is the 3-minute chart of the S&P 500. We can see that price is aggressively trading higher with that big bullish bar. Also, we can see that price created this fair value gap here. Price is trading into a level of discount. We are entering at the top of the fair value gap. All this happened during the morning session and we are targeting this 1 hour gap. The trade duration was 24 minutes. Price rallied 35.7 points to full take profit. Time of day was 9:36 in the morning. It was Friday and the risk to reward was 2.97. This concludes the weekly review and now let's dive into the market outlook. Let's start the market outlook on a weekly chart for the S&P 500. We can see that this low of the candle and this high of the candle leaves a gap and price is seeking that gap and filled the gap on the last trading day of the week on Friday. Big bullish candle closing the week, and right now price is trading into this bearish order block here, and I'm expecting a rejection from that bearish order block lower. Let's dive into a daily chart. We can see here that this green box is indicating a discount market and this orange box is indicating a premium market. Price rallied higher to close this gap and right now it's staying at the 50% of this high to this low. This is equilibrium and price is also at the weekly bearish order block. And this is the 4-hour chart of the S&P 500. I'm expecting a little bit of retracement after filling this gap and after mitigating this weekly bearish order block. I'm expecting price to trade a little bit lower to finally push higher into this premium area, into this optimal trade entry and into this fair value gap or this fair value gap. Couple that with the dollar, it's a daily chart. We can see that price is trading higher and this is causing the S&P to drop, because if the US dollar is moving higher, this is a risk off environment, and we can see that the indices, the stocks, the CRB index and the majors of the currencies are declining. But the US dollar took the buy side liquidity here on that run higher and declines So this gives room for the S&P to trade higher, but long term, especially with the Fed increasing interest rates aggressively, I'm expecting the dollar to run higher, and at the same time I'm expecting the S&P 500 to trade into this premium area, into this optimal trade entry to shorts. So this would lead into a risk off environment. Once price is in a premium market, I will look for shorts. That's it for the video. I hope you guys liked it. Feel free to thumbs up and subscribe to my channel. I wish you all a good and successful upcoming trading week, and talk to you next Sunday. DC Capital is out.